Hello everyone, this is Andrew McNair from SWAN Capital with our April 2021 SWAN report. In this month's video, we're going to discuss some recent headlines that influence the financial markets. But I also want to provide you some perspective on what these developments may mean for you over the next few months ahead. Now, as always, please stay tuned at the end of this video for some required disclosure statements. Now, at SWAN Capital, our market outlook remains positive. See, we've seen stock prices power higher in April, and we've seen the S&P 500 index reach all-time highs thanks to the enthusiasm toward the wide distribution of COVID-19 vaccines, which is now available to the younger population. If we look at the three major indexes, we're starting to get used to double-digit returns. We saw that the S&P 500 year-to-date is up 11%. The Dow jumped 8% so far for the year, and the NASDAQ is up 11%. Now, the equity markets keep going higher and higher, even despite the world economy having negative news out there. We saw some really major headline news appear toward the end of March, and the markets shrugged it off. We saw that the Suez Canal was blocked. The obstruction of the Suez Canal is not a laughing matter. It's a major artery for goods and raw material from the Middle East and Southeast Asia to the continent of Europe. It affects world trade and endangered the energy industry. But the good news is that the vessel was dislodged and commerce is back to usual. But the problem is we're still having supply and demand issues because when ships are coming in, we still have those COVID-19 restrictions. Speaking of COVID-19, luckily we can see that the pandemic is slowing down and vaccine distributions is becoming more widespread. And this leads to the fundamental condition that the economy is going to remain positive and starting to continue to gain its momentum. However, the equity market has been on an unprecedented run since the last year's lows, and we can expect more volatility and even a correction in the coming months is possible. Now, near-term risks include unexpected developments in fiscal policies, rising interest rates, and negative COVID-19 news. So given these lofty equity valuations, we need to make sure that we keep an eye on earnings because earnings dictate valuations. And at SWAN Capital, we continue to value international diversification. And why? It's because the U.S. economy is not keeping pace with the recovery of Southeast Asia. So we saw China's first quarter GDP go up 18%. We saw retail sales in China increase by 34%. And it appears that China is shrugging off the difficulties from this pandemic, and they're on track back onto their original mission to becoming the world's #1 economy. So here in America, we have to get back to work to keep our position. Now, the Fed here domestically is keeping interest rates artificially low, which could mean inflation in the future. Historical data can be used to show that rates will probably go up in the future and that equity markets will decline if we continue at this pace. When we look at Washington, we see that President Joe Biden announced a new infrastructure plan late March, which is expected to reach a tremendous $2 trillion with a T. The proposal builds on last month's $1.9 trillion stimulus package. So far in the first 4 months of presidency, Joe Biden is proposing to spend nearly $4 trillion. That's a very abnormal amount, and that means eventually people are going to have to pay for it. So that leads us to the discussion of taxes. And we can expect that we may see in 2022 higher capital gains tax, higher corporate tax rates, and higher income taxes, which the market will not shrug off positively. They will look at that as negative news. Now, if we look to the housing prices in the housing market, we've seen that house prices are up 11% from January 20 to January 2021. And this is caused by all of these lockdown cities moving to other states, causing a surge in demand. And as a result, the cost of housing and building materials has shot through the roof, literally, or pardon my pun. Just like with every investment, caution is always advised. When people are overpaying, especially for housing, we saw that in 2008, it's always important to note these conditions, along with the economy reopening fully soon, can cause a large impact to higher inflation. Now, the Fed will have to watch closely with the housing market because we don't want to see our housing market and the economy become at risk. And the Fed needs to leave things be and try to see how things go before they inject more aid. Now, in regards to the labor market, we've seen employment been rising steadily month over month. And we've actually seen that unemployment rate has dropped to 6%. See, the consensus called for 625,000 jobs last month, and we saw it go up 916,000 jobs. It's huge movements in the labor market, and we need to keep our eye on that. So that's it for this month's SWAN report, and I want to thank you for listening to our monthly report every month. And remember that none of what we talk about here is a recommendation for you personally, but to give you information in a timely basis. If you have questions about your own personal financial situation, give us a call at 850-380-9558. That's 850-380-9558, and we'll be happy to talk to you. See you soon.